Everyone, I need to turn on the light in my office. Hold on a second. I just realized how
Welcome
dark it
to
was. I'm Roger Bryan, your co-host of the Raising Millionaires podcast, and this is
your other co-host, Richard Lorenzen.
who probably remembered to have the lights on in his office. So,
The lights
Richard,
are on.
I
Yes.
realize we've always got a lot of stuff to talk about. The Fed
Yes.
only cut a quarter point.
Only.
What the heck? Where's our half point?
But they said there's another 50 beeps coming later this year, which means two more. So two more quarter points in
I
the.
want it now. I want it now. Why did we get it?
You're preaching to the choir. I don't know why. I don't know. This could be a longer conversation, but they
It's
cut
almost
rates a
like we do a
quarter
call to
point.
have these conversations. I don't know.
Well, it's interesting. So here's my point. They cut a quarter point, but they also say in the same announcement that they're going to cut it two more times later this year, presumably a quarter each. So like basically they cut it a quarter, but really they told us it's a 3/4 point cut effectively coming later this year. So why not just do it all at once? I don't know.
I mean, that's the thing. Like you're spot on. I do think the market had said it had baked in half a point. Although with this, the Dow whipshot a little bit, but it's on fire again.
First it was down and then it was up and now it's back down.
The Dow?
Well, the S&P is
Oh, the
down
S&P and Nasdaq. Yeah, the Dow's are still up almost 400 points,
and
and
the
my
Russell's up like
UVIX
2%.
calls are down 32%.
The Russell's up like 2%. So there's that.
I
I guess
did
the
end
argument.
up taking, and I keep doing this, a very small position on the UVIX, um, which is a
Got it.
double leverage VIX instrument because you can't buy options directly on the VIX. But I
So the
bought into the idea that the market will go down because I thought they were going to be disappointed even if they got what they wanted, but then they got less than what they wanted today, but more than what they wanted in the future. So it's a little bit of a balancing act here. Nothing
yeah,
can slow this market down. Stop trading against it, Roger.
I was kind of thinking that if they came out with a quarter point today, this could be like kind of a sell the news kind of event. And so if anything, we talked about this morning, like maybe shorting ahead of the meeting. But if anything, I was looking to, if there was a dip, I was looking to buy that dip. Um, Things are down right now, but it's not a dip. So there's really nothing exciting going on at all. Um, I didn't read through the rest of the guidance yet. I don't know if you saw as far as like what the Fed's outlook, how they're feeling about, especially about employment.
I have not had a chance to look at anything. I'm going off back to backs today, just like you were yesterday, just trying to
Yeah.
stay above water.
Yeah, I just came back from the New York Stock Exchange where everybody was also expecting a quarter point. And I'm reading through like some of the notes right now. So this was an 11-1 vote. What? That was Trump's guy. Yes, newly installed Governor Stephen Miron, I guess is how you say it, was the one voting against it because he wanted a half point cut. That's what they're saying that was the one vote no. But either way, you're seeing a lot more consensus than you saw in the last meeting, where I think it was like almost 50-50 between whether to cut or not. It was very split. This is basically unanimous in favor of a rate cut, but just one guy wanted a bigger cut than what the rest of the board did.
Still wondering, it's 2:30. Is the market going to sell off into close?
Good.
Because this isn't that exciting.
This only happened 30 minutes ago, so everybody is still processing the data from the Fed.
Nope, S&P just turned green. I could be wrong. My expectation was a slight sell-off. And you and I talked about this like last week or 2 weeks ago or even a couple weeks back, right? That there's so much anticipation around this that there's almost bound to be a slight sell-off no matter what happens.
Yeah. A key statement here from the Fed, they said in their statement, quote, uncertainty about the economic outlook remains elevated. The committee is attentive to the risk to both sides of its dual mandate and judges that downside risks to employment have risen. So that's more negative than their statements have been from the last few meetings. They also said that let's see, majority of the FOMC is now targeting 2 further cuts this year. Goldman Sachs says that they believe it would take a significant upside surprise in inflation for the Fed to back off of its new easing trajectory. So yeah, we got a quarter rate point cut, but the bigger story might be that by the end of this year, it's really going to be a three-quarter point cut because there are 2 more cuts coming at a quarter each.
Mortgage rates down to that 5% number.
No, I don't know. I mean, I really don't think you're going to see mortgages anytime soon going back down to 5%. Even if we go like full-blown recession and the Fed starts aggressively cutting, mortgage rates aren't directly correlated to the short-term Fed rate. There's some correlation, but it's not, the mortgage rate's a longer-term interest rate. I don't know if you're gonna see rates go down to 5%.
Government intervention. I agree. I'm just looking at right where it's with 6.5, 6.4, and that was before you bake in a 75 basis point cut that would get you down around that 5.6. So there's still a bit of a ways to go. I thought the most interesting thing was though, as we were messaging back and forth and you were talking about the points on refinance. I haven't had to refinance in a long time. That the last time I remember refinancing, you were sometimes looking at like 1.5, sometimes 2 points to refinance unless you bought that down. And you were messaging that like it was a half point. I'm like, well, you know what? It's a different economic model. So for those of you that are listening, the points are the additional fee you pay. So let's say to make the numbers easy, you have a $500,000 loan and you have to pay a point. That's $5,000 in fees, not just documents and closing and appraisals and all those fees. It's just the fee on top of the fees to get the loan. So if that's half a point, though, that's now $2,500. And if you're looking at a 30-year mortgage where a half point might save you $50,000 over the term and it's a $5,000 cost, it now starts to make sense.
There are also different there are different options for refinancing as well. There are options that have no points. Trying to look back through like some of the stuff that I've gotten from bankers recently.
Game though, right? The option to refinance with no points has a 10 basis point higher interest rate, so you end up just paying the money at a different time.
Yeah.
I'm not saying you need to be a statistician to be able to understand refinancing, but using some calculators and really doing your research. I know the last time the last time would have been 2018. No, then we refinanced in 2020 or 2021 at 2.79. And that's where it's still at. But yeah, there was like all these different options. This points here, rate there, fees here.
You have to just remember that anytime you refinance, there's always going to be a break-even period. Whether it's 2 years, like I think a lot of times it's about 2 years to break even on a refi.
The longer your horizon, the more value you get out of it.
Yeah, exactly. Like if you just bought a house 2 years ago and you have 28 years left on your 30-year mortgage, it can make a lot of sense. It might, if it might make a lot of sense to do a refi. Whereas if you're about to pay it off in 5 years, no. And there is a break even on those closing fees, the points, the closing fees that you pay up front. A lot of times it will take 2 years or so to break even on the cost of paying those when you refinance. But again, if you have a lot of time left on your mortgage, it can make a lot of sense. The way I kind of look at refinancing too is, because everybody looks at it as they want to lower their monthly payment, and that's true. But really for me, it's about lowering the interest, if that makes, like, I want to still pay the same monthly payment when I refinance, even though I could technically pay less, but it just allows me to pay.
You're going to pay less over time.
Exactly. So the fact that the clock is resetting isn't as always as big of a deal if you continue paying the same amount per month and you're just paying more towards the principal. So yeah, I mean that's the mortgage side of the equation. But borrowing costs across the board are gonna come down from this interest rate cut, and that's also gonna mean stimulus for the economy and hopefully for jobs. That's the point. That's what they're trying to do here. So it'll be interesting to see how that plays out as well, especially following that terrible job number we saw last week.
Many variables to look at here at what all of this means going forward relative to what's already baked into the market, right? For those that are listening, like why do lower interest rates matter at the macro perspective? It's that in deal making or in large scale investing, like right, building a new factory to create jobs
Yeah.
or launching a new product line or buying a competitor, all of those things are financed by debt. And they're typically public market debt through the banks, which then leverage treasury notes to offset risk. And when you lower the rates, more people can go out and do more deals. They can put more money into the market. It's supposed to create more jobs. But it can also do the opposite. It can make borrowing costs lower for hyper growth companies so that they can buy back stock, right? Squeezing the valuations higher by lowering the supply. And that money never actually trickles
Doesn't trickle
down,
down.
to use some Reaganomics, into economic creation.
Yep.
And then
Yep.
trade does a lot of that, geopolitical. The reason that it naturally went into interest rates, we're always talking about that, but on the mortgage side, one thing that's interesting with that, we did we talked about home affordability and the make, what did we call it? Make home ownership great again. And
Hmm.
it's weird the way that some of these reels post from a time frame perspective on different channels. That reel was from like a month ago and it just posted on TikTok today. And people were coming after me like, oh, I can never afford. And I'm like thinking they're all Gen Zers. And I asked, and one was like, oh, I'm Gen X. I'm like, oh, interesting. You're Gen X and you think you're never going to be able to afford to buy a home, right? You've got to be in your 40s already, right? You got to be mid 40s to be Gen X. That's a problem.
Here's an interesting stat for you. Speaking of Gen Z, Gen X, Bloomberg came out with a report, I guess today, saying that um, Gen Z, so the average FICO score, average credit score across the board for everybody, no matter your age, dropped over the past year. The average score went down from 717 to 715, and the generation that had the biggest drop was Gen Z. And I'm trying to see if they have like an average for Gen Z specifically of like what their
Well, it's
uh
interesting too because I saw an article that goes along with that recently that Gen Z is, they don't necessarily use traditional debt, but they've really become accustomed to the buy now, pay later, like fractional
yeah,
payment strategies where, right, they click a button inside of an app and it's like, hey, instead of paying for all of this today, well, you're going to make 4 weekly payments for this much. And it's like 30% internal rate, but it's like compounded at like 60% interest rate, which if it was done in a normalized manner would actually be illegal. But that buy now, pay later mentality is really crippling that generation and compounding the negative effects of their ability to make long-term plans. Now that's not everybody, right? Not everybody's that dumb, but a lot of
there's
them
a lot of
are.
people. It's a lot of people. You're seeing it's Gen Z a lot of times are not, they're not using credit cards as frequently as like millennials and Gen X and baby boomers were, but they are gravitating towards buy now, pay later. The other factor that they said was pushing credit scores down for Gen Z was the resumption of student loan payments as well. So just across the board, Gen Z saw an increase in credit utilization, and that was the main factor driving down their scores. Um, so I mean, some of that is an indication too, maybe of the economy. If if with inflation being up, with the job market being weaker, people might be relying more on credit. But just thought it was interesting that credit scores across the board have gone down. Not a lot. This I've seen this on every news outlet this morning. Like it's a big drop, but like 717 to 715 to me doesn't seem like a significant
2 points?
change.
No, that's normal
Gen
monthly
Z is
fluctuation.
yeah. I mean, I So an average credit score in America is 715, according to Bloomberg, which I guess is more or less what I would have guessed it is.
The market whipshawing 270, then 360. Now it's down. The Dow's down to 250. Nasdaq's down 150 again. Why is my VIX though? My UVIX not moving. And
Well, VIX is down 2.5%.
well, it was down as much as 5% right on the
Uh,
initial news.
the Russell was up 2.5%. It's now only up 1.5%. So there's a little bit of selling there.
I don't like to be the person that's like, I need a big market fall so my trade plays out, but I need a market fall so my trade plays out. Just
Yeah,
sell
why
off
not?
the rest of the day.
Every other trader is saying that. So
Well, see, now, okay, so, okay, that's a very interesting point. So, one of the things that has slowed me down from options trading is that although the spreads, now NVIDIA would be an exception, the spreads haven't been um, super wide relative to normal conditions, but the movement, right? Now, you've got Oracle, right? That would have been like 100x if you'd have been on the right side of that one. And I bet you plenty of people were. But
yeah,
most of these stocks that are coming through earnings now are not getting the 6, 7, 8% swings that you need on either side of the options trade to really make money. So I don't want to call it a flat market because there are still those pops, but and I don't have statistical data to support this. Maybe I could create it. Not create it, but find it, like actually research it. That the probability of the movement in price on around earnings or major news events, the swings have shrunk relative to what had been going on from the April time frame. Actually, let's go back to election through probably June, July.
yeah,
The Trump trade momentum swings.
yeah. There's a lot less volatility in the market. There's a lot less uncertainty in the market too, because we don't have new tariffs getting announced every morning and then getting walked back, a couple days later. I and coming out of the summer, the market's been less volatile overall. StubHub went public this morning on the New York Stock Exchange. I was there for it, and the stock's down like 6% now.
Recent IPOs.
Yeah, so I mean, I haven't looked into it enough to say if it's like a reflection of a broader sentiment in the market or if it's something specific to StubHub, but you
I know
don't.
it's specific. They probably just priced a little high. There's been a lot of push in the IPO markets. You want to try to price relative to demand while also leaving a little bit of skin on the table for new investors to come in. Uh, but those trends always end, right? We've seen a couple 10Xs on those. And then what did we have last week that had like a nice 20 or 30% bounce? That seemed like it was perfectly priced. But now StubHub here, $8 billion valuation. I don't remember their private market valuation.
I don't know. They went public this morning around $23. They initially popped up to like 25. What is that? That's like a 10% pop at the IPO, and then it just from there it just tanked the rest of the day.
Kind of like a 20% pop just means they mispriced it.
Yeah.
Figma. When did Figma go public?
I mean, who are some of the tech companies that you're watching for potential IPOs in the next
Oh,
year?
that was August 1st. Potential IPOs. Let me pull up the portfolio.
Because I can't even think of any.
There are two more that I'm watching. You know what's interesting? I woke up this morning feeling fine, and around lunchtime, I felt like I got hit by a brick wall. My nose is so effing stuffy. This is going to come up.
School is back in, so it's the
Yep,
season.
that is exactly what it is. Ooh, my UVIX is only down 11% now. Maybe I might get what I want. Oh, yeah, the Dow's only up by 90 points. Nasdaq's down 200. We're going to get a sell off into the end of this market.
It's fading. Yeah, I think in the last 30 minutes, so it's 2:45 right now, around 3:15, 3:30, I think you're going to see momentum pick up. There's nothing going on. So for the people on the other side of that trade too, who were sitting long, waiting to maybe ride a pop on the interest rate news, that's not happening. They're going to have to close out their positions. Yeah, I mean, I think we're gonna see this fade, and we're gonna be down at the close. So
Anthropic is one that I'm watching,
Anthropic
and Databricks.
and what?
Databricks. You're talking, these are $100 billion valuation companies that as the AI play continues to roll out, um, the next major stage of liquidity for them is public markets. There's huge demand around Databricks too, that I think pushes them closer to an IPO. Right, the only two companies above Databricks in this mapping are SpaceX and xAI. I don't see them going public anytime soon. So that puts Databricks like right at the top of the list, and then Anthropic's right behind them.
What do you think about the stuff going on with OpenAI right now? So they have a valuation of about 500 billion, right? And they were originally nonprofit. They were transitioning kind of to for profit, but their nonprofit parent company, because of the kind of the way they ended up structuring this, they announced today that their nonprofit parent company will continue to have oversight over the company and will own a stake that's greater than 100 billion bucks, which is it means that the nonprofit parent's going to own at least 20% of the company.
Is
What are we doing here?
Okay, so this is kind of crazy, right? People set out with this altruistic vision of like democratizing AI for the world, and then they're like, holy shit, we've got $1 trillion company here, right? This doesn't come along very often. How do we backtrack all of our beliefs, ideals, and morals so that we can put money in our pocket? And that's exactly what it is. But you've
Yeah.
got so many big investors. A year ago, Elon Musk was yelling and screaming because he put so much money into this company
Yeah.
that it
Yeah.
was a nonprofit altruistically, but then they wanted to transition, but then they don't want to give ownership to anybody. And so there's two parts to this. That nonprofit element could be to legally skate having to give all of those original contributors equity in the company, which is kind of goes along with the tip that OpenAI and Elon Musk have. The second side of it is it reminds me of what's the guy from WeWork,
Adam Newman.
Adam Newman, where he wrote in these clauses into the financial filings to go public that were so ridiculous that it imploded the company. It didn't help that the company was all smoke and mirrors, but he triggered more eyeballs on things by doing this crazy stuff. So to me, OpenAI leaving this nonprofit element in place is one of those two things. They're trying to do something crazy to have some level of control, or they're trying to really like go like this to a couple different people that are part of the
Mhm.
equation.
Yep. Yeah. So the nonprofit parent is going to retain a 20% stake, roughly. And will have oversight, I guess. Like I don't know how that works. If they're going to have a special class of stock. Um, but it's going to be interesting to see how that plays out, especially as OpenAI maybe hopefully one day looks at an IPO.
They will. I mean, they will probably be well, not the first. They would be what, the second company to go public at a post-trillion-dollar valuation.
Yeah.
You have to give me a little bit of leeway on that one because what is it, Saudi Aramco or whatever it was?
Aramco, yeah.
Yeah, that was a really weird one because it was like they priced 1% ownership in their oil reserves. And if you were to calculate the full value, it was one thing, but then the tradable asset was another. So, right, when they say there's only been $3 trillion companies, we've got NVIDIA, Microsoft, and now Alphabet. Um, so there hasn't really been a $1 trillion real IPO.
Yeah.
But if there's going to be one, OpenAI could be it. And that might be what they're pushing for, right? It's a once in a lifetime style thing. I don't think this is going to become a new norm, but it's going to be one that people will talk about for at least as long as we're alive.
So Aramco went public in 2019 at only $30 billion. And then immediately, because of the way they priced it, immediately the market cap went to $2 trillion shortly after
Yeah, that one
that.
was a
That,
super weird one.
that was on the Riyadh Stock Exchange as well. That was not on a US exchange.
Well, you know
So,
what was interesting though? They priced a security token through a US tokenized exchange, T0. So that's why
oh,
I was
okay.
involved in that because at the time I was a very large investor in T0, which turned out to be a terrible investment. Um, But I remember that one, and it was a head scratcher how the numbers were being finazzled. So this is a combination of how do we F with Elon Musk? How do we pull an Alan Newman WeWork style craziness combined with some type of number finazzling so that we can be $1 trillion company at IPO. It's funny though, OpenAI, you can't get into it in middle market, right? It's not floating like SpaceX or XAI or Perplexity or Anthropic or any of those. It's just
You
not
mean in the
there.
secondary, like an equities end?
Yep, it's not there.
Yep. Yep.
Now I don't know if through one of their investment pools
Well,
if they've gotten access to it, but they've been pretty.
well, the private, so the for-profit entity, which is that also called OpenAI? I don't even know what it's called. Um, that would be the investable entity, right? And has that actually been like, is that fully formed yet? Like, that's why that's why there's no float.
Oh, I totally missed who else could go public. Stripe.
What?
Stripe could go public.
Oh, Stripe. I
Yep,
think I saw them on equities then. Is that
they
right?
are. They just launched a new
Yeah.
funding round at $123 billion valuation. The minimum on it though is 125,000.
Mhm.
It's a high minimum to get in on that one.
And is that for direct shares or is it just like shares in the equities end fund that owns
No, it's
it
direct. It's direct. I don't like
direct?
those funds.
Yeah, I don't like the funds.
Yeah, their current multi-company fund. Who's in it?
You got, yeah, so I see, I just logged into equities and I see the Stripe, they have Turo on here, and they've got Ripple.
Ripple's been, oh man, that one's been all over the place. There was a
Crash.
time when those lawsuits first came out. What are share prices in Ripple now? Like 120? I remember when
So,
they fell below $10 for a little while. Oh, trending. There is OpenAI. There is, yeah, total funding 500 billion. There's no opening for a raise.
Ripple's listed here at 123 bucks a share.
Yeah, there's like I remember a time I remember looking at a deal. I think it was 100,000 minimum, but it was like $7.83 a share.
Brex is still around. I haven't heard about them in a while. They're still on here.
The Dow's about to go negative.
Yeah, it's going. Yeah. Coinbase. What the? Wait a minute. How is? Oh, Coinbase was on my watch list from years. I was gonna say I own stock in Coinbase as a public company. How is that on equities then? But I guess I had flagged it as a company I was interested in prior to the IPO. That didn't work out well for me.
I took my beatings on that IPO within 2 days was in and out.
Perplexity. Yeah, I mean, if you're an investor in the public markets looking for an exciting tech IPO, StubHub's not really it, and there's not a lot going on in the public markets these days to get excited about.
It's so frothy, but it just keeps going up. It's not that I don't want it to, don't get me wrong, but it just doesn't make any sense.
So I'm now sitting with about maybe 5% in cash, 6% in cash, which is generally more cash in my equity on the equity side. It's more cash than I usually hold, and I've given up on trying to put that money to work. I'm just going to keep it in cash until we have a correction. Maybe it's a month,
I
maybe it's
hear
six
that a
months.
lot on CNBC. Everyone's
Yeah,
talking about how good a stock is, but nobody's talking about wanting to buy. Everybody's waiting for some type of pullback to take
I
action.
can't
The problem is
justify.
then though, if you want a 3% pullback, but somebody else will take a 2.9, are you ever going to hit your window?
Maybe not. Well, yeah, I can't, but I can't really justify buying at these levels. And if the stock market keeps going up and I don't buy, well, my portfolio keeps going up, so I win.
Yep.
And if it corrects, now I've got enough cash, I can buy down like a significant percentage, and I win again. And so I don't see the
It's the same thing
justification.
with these options that I buy, right? They're just insurance against like the best thing that could happen for my overall portfolio in the short term would be for my options to be wrong, right? Because if they're right, I'm just covering my downside. For
Right.
example, like I am back to par on the UVIX now, but my overall portfolio is down 1.68%. So I've lost significantly more, but because the UVIX is a double leverage, right? I'm going to start making that back up if the market goes any lower than this.
Yeah.
Go positive. Down 2.57. Okay. I'm talking about my UVIX option. I was down 35% at the beginning of this call, and now I'm down 2.57%.
Yeah, I mean, market is really coming in. Let's see. Trying to see where's the momentum here. Oracle's down 3.5% right now.
I was looking at that for a potential pullback because it ran up so much. What do you think NVIDIA is going to do on this news that China's not buying the chips as this whole negotiation goes on between the administration?
Well, judging by how so much of NVIDIA's valuation is already just based on hype, I I don't know. I do think that the issue with China is actually fundamentally damaging to their business, but I mean their stock price has never been tethered to the reality of their business anyway. So I don't know if it does anything. And if in a stock like that right now it's so hot, you see a pullback and more people just jump in. So I don't know. In the near term, probably it doesn't pose a significant risk. Lyft is up 13% right now.
Crazy. Like, I'm just thinking back to like the first time I started looking at stocks throughout my entire career now. I'm looking at a stock, NVIDIA, with a 48 times PE is a $4 trillion company, and that's just mind-boggling. The amount of money, the revenue, the earning, it's just insane.
Snapchat's up 3% ish.
Oh, what just happened?
Well, TikTok also, it looks like will be saved in the US for better or worse.
They just wanted their piece. The government got a piece, and everybody else got a piece, and the Trump family got a piece, and everybody's happy. Kumbaya. Steal our data, manipulate our minds, destroy our youth.
I think it's like 80%, right? The stake that Oracle's getting with some of the partners.
Was it Anderson? And who's the other one?
Silver Lake.
Silver Lake. And I guarantee there's a chip in there for the government in that sovereign wealth fund, whether or not that's been directly said or not.
Yep. Just another one to add. What was the deal that we did last month for the Sovereign Wealth Fund? The
We were
big
saying
one?
we were already at least $1 trillion if you consider that we have 400 billion in rare earths from the Ukraine, if we get that.
Yep.
500-ish billion if that's not part of it. So we're somewhere at a 500 billion to $1 trillion. Um, that should be over $1 trillion with a little bit of this. Getting some.
There was an interesting article in Barron's over the weekend about rare earth. I didn't know that so much of that market. I mean, I knew it was controlled by China, but I didn't know that China had like 80% of the rare earth.
Well, you have to be careful with that. If you really read between the lines, isn't it that China has 80% of the manufacturing capabilities in it? Like the actual stuff in the ground, we have plenty of. We just have no infrastructure to bring it out, process it,
Yeah.
and get it ready for market. Now, I could be wrong, but that's my interpretation of it.
I think that's right. They have processing and manufacturing. But so yeah, maybe they don't control it, but at the same time, the US doesn't have really any viable companies that
They
can
don't,
process.
the lead time for them to come up and running, meaning it's like build out the facility to go into the ground and get it out, transport it to, process it and prepare it for what it needs to be used for, and then move it on through the production, the supply chain.
Well, now I remember why this came up because the US government, going back to this all ties into the sovereign wealth fund. The US government just made a deal with this US based rare earth company called MP, which apparently there's a handful of US companies that have just basically struggled for years to get a foothold in the rare earth processing and manufacturing space. MP is one of those companies. DoD just did, or maybe we call them the War Department now, not DoD anymore. The War Department just did a significant, like huge deal with MP, basically guaranteeing them 15 years of revenue in government contracts for rare earth, I guess, material. And so now MP, this stock that Barron's did this whole profile about, they're saying could be like one of the next big stocks to watch. they're the only US-based rare earth company that has any kind of viability, basically because of this 15-year revenue guarantee from DoD.
Yeah, because that was
Uh,
what, a $24, $25 stock before that announcement.
and
And
now it's
now,
like it's $60.
yeah, 66.
So it's had a significant run up because of that. But at the same time, if this is the beginning of like a resurgence of US, not even dominance, but just US competency in rare earth, processing and manufacturing, that could be $120 stock or a $300 stock. So I
Well,
have
let's
that on
look
my
at it from a
watch list.
market cap perspective. What is their market cap even now?
Of MB, it's a good question.
Oh, it's an
Yep.
$11 billion company, so it's not like by any means small. I
No.
figure it was like what, 3 or 4 billion with before the announcement.
Yep. They've been kind of just plugging along in that space for a while. I think maybe close to 2 decades. But this is kind of like the inflection point for them.
Sidebar topic here. Like what it no, it's related though. Like it's not Mr. Wonderful. It was Dallas Mavericks guy. Man, I got brain fog.
Mark Cuban.
Mark Cuban. He has that saying like you only need to be right once,
Yep.
right?
That's right.
You can hang out and just kind of like la di da along for 20 years, and then one thing can change, and all of a
Right
sudden
place,
it's
right time.
yeah. So, and I mean, that's with investing, that's with being an entrepreneur, or just anything. I think the big thing is that how do you position yourself to be best I almost said positioned. Like how do you find yourself in the spot to be right once?
Preparation meets opportunity, right?
There's a little bit of longevity there. I think back to like so many people I
Consistency.
know that were in Bitcoin 13 years ago, right? No one really knew what it was going to become, but a couple people had an idea.
Yep.
The rest of us didn't, right? I can think about how much Bitcoin has gone through my fingers, or even more so Ethereum that's gone through my fingers, right? I was right. I was right multiple times, but the longevity of that wasn't played out properly. Damn, this VIX just went. I was at even, now I'm down 43% again. Oh, the Dow's up 200. This is some whip. I'm just going to stop looking. It's giving me a headache.
The Dow is interesting today. The Nasdaq's been consistent. It's still down about a quarter point, fifth of a point.
Is there a specific stock in the Dow that's doing this today?
I don't know. Is Lyft in the Dow? I don't know. I'm trying to look through like who the biggest market movers are today, and nothing's really sticking out to me as being I mean
Well,
qual
across the board, no Dow stock is up more than 2%,
yeah.
and no one down more than 2%. Well, I guess Nvidia is down 2.29.
I still think we're gonna close down. Um I still think this is like a sell the news. Everybody's still in digesting. It's only 3 o'clock. There's still an hour before they close. The last 30 minutes are usually the most volatile. Um,
What's StubHub doing?
StubHub is not having a good day. Although the people who cashed out had a good day.
I wonder on something like StubHub, there's so much like it wasn't StubHub. Who's their biggest competitor? Or Live Nation. The
Live
CEO
Nation
of
or
Live
ticket.
Nation came out and said that the move to full ticket pricing is having a severe negative effect on earnings. And it's like, no crap. I don't like going in and seeing a ticket for $70 and then going to check out and it's 165. It's so frustrating.
Yep, 100%.
So now people actually see what it costs. I don't know when the last time is you bought tickets, but they do a really good job of hiding that. Like you
Oh
basically
yeah.
got your credit card information in before you even see the full price.
Oh yeah. I like we buy Broadway tickets, and the ticket will be one price, and then you get to checkout, and it's like there's a convenience fee and a processing fee and a this fee and a that fee and taxes, and it ends up being like double. It's ridiculous.
I
What
feel
was I
like
just?
today was a lot about the Fed and what's going on in the markets
Should we
relative to
pivot to
what,
personal finance?
huh?
Should we pivot to personal finance?
Let's do a little bit of personal finance. What does all of this mean? We've talked about it from the mortgage perspective. I feel like myself, you, and so many people are wondering, right? Where do you put money right now?
Yeah, where do you put money right now, Roger?
Well, you know what one of my best performing investments of the year is?
What is it?
Silver.
What is it?
Silver.
Silver. Oh yeah, we've talked about this.
Yeah. So, and it's funny. This is a very long cycle commodity. And this is the third time since, wow, probably the 90s that I've ridden this. And it might not be as like my previous was buy at 7, sell at 44 an ounce. My DCA on silver right now is about 12 or 13 and it's back over 41. I mean, that's a 3x.
Yeah.
The problem is like if you look over the time frame, the time horizon, I started accumulating pre-COVID, right? Right as COVID was starting to hit, I started buying heavy because if COVID would have become worse, even though it was bad enough, you would think that the commodity prices would go up. And I would have typically liquidated at the tail end of that when we were hitting the previous highs, but it's doubled since then. I do have to acknowledge that same money put into certain other stocks would have been 10x instead of 3 or 4x. But it's still, they're still said it's got room to run.
Do you think it has? You think it has more room to run?
I do. They're calling now. Silver tends to trail gold. That's usually like a 70 to 90-day laggard on new highs. Goldman Sachs, I believe, came out today and said that they're expecting gold to hit 4,000 before the end of the year. So that's still another 8 or 9% run up on it. And if silver is trailing that, you might see 10 to 12%. I mean, those aren't numbers to like blow the roof off, but if you're looking at the rest of the market being overvalued and you're looking at risk on assets like Bitcoin not being viable, or you're looking at interest rates dropping, so secured, more secured return rates aren't going to be available. Something to look at. I don't know. What's your idea?
To be honest, if I were looking for a risk on asset right now, or if I were looking for an asset where I could outperform the market, it would probably be Bitcoin. I would wait for another pullback in Bitcoin to pull back to, like 103, 100 again. It was just at 103, what, like 2 weeks ago, and it's back at 117 now. It would probably be that. I don't see a lot of other opportunity out there right now.
Well, I
You-
think Bitcoin is it even in accounts where I didn't have access to touch or screw them up. So like my mother-in-law passed in 2018 or 19, and she had small bank accounts for each of her grandchildren. And my dad had me take that money instead of giving it to them, put it into custodial brokerage accounts, and I put it all into Bitcoin. So the first of those grandchildren is turning 21 in November, and by state law, it has to become his. That $1,400 is now 11,000, right? If he would have gotten that, what he would have been like 15 or 16 years old, that $1,000 would have been spent on video games and other BS stuff. And now he's getting a good chunk of money. I was just messaging with him today because I needed to get an updated address because I have to by law file paperwork to turn over
Yeah.
ownership of it. But his brother, who's 3 years younger than him, right, had the same amount. I guarantee by the time he turns 21, it'll probably be worth 20 grand. Those amounts aren't life changing, but you're looking at 10, 20x in a matter of a few years.
Yep. And when you're investing it at such a young age, it's going to be compounding for the rest of their lives. So,
Well, with them, they're going to cash it out and they're going to blow it now, but
okay, fair enough.
nothing I can do about it.
Well, I'm looking at the market again. The market moving lower. It looks like the reason that it's moving lower is because in the press conference, Powell indicated that. So he's characterizing today's rate cut as a risk management cut, is what he called it, and basically they're kind of hedging in case the economy does like dramatically turn down at some point later this year.
Which means there's a
And
risk of that happening, which is can have a
which
negative
means there's a
effect.
risk of that happening, but really the bigger piece of it is he went on to say that it's not really a reflection of like a negative state that they think the economy is in, and they believe that in 2026 there's only going to be one rate cut. So they're giving a much more hawkish kind of outlook for 2026, which seems to be disappointing the market.
I don't know. My VIX is getting wiped. My VIX play is getting wiped out just on this little whip show. I've got until Friday. We'll see what happens overnight.
It's entirely possible the market just closes at break even.
Yeah.
But kind of the takeaway from this rate cut, though, is that for a lot of the people that are going to be going on TV talking about, oh, the Fed cut rates, they're going to cut rates 2 more times. At face value, that is the headline here. But when you look a little bit deeper, they're indicating that, assuming Powell is still chairman next year, they're indicating that they're actually going to be a lot more hawkish maybe in 2026. Um, which might not be good for, you were talking earlier about, when will there be a 5% mortgage again? That this may not be a good sign for that. Um, but more hawkish than expected maybe from the Fed, and that's why we're not seeing like an exuberant rally from the rate cut. That makes sense to me.
We'll see what Trump has to do with all of that too.
Yeah, I mean, again, like I said, who knows if Powell will even be the Fed chair in 2026?
Right?
Yeah, on paper, like he's supposed to be there until May, and so earlier this week, Trump's nominee for the Fed Reserve Board of Governors, Miran, he was confirmed, so he's the newest member of the Fed, and a lot of people are saying he's favored to be the next choice for chairman.
Is that what the not the odds makers? What do they call all of that now? Like with Robinhood and stuff,
Hmm?
where you can bet on who's going to do what without
But yeah,
doing gambling.
yes,
What's it
line up.
called?
What's the site? What's the site called?
I don't know. I am so like I want to say I'm medicine heady, but I haven't taken any medicine. It's just like I feel like my head's turned into a brick.
I completely forget the name of the site that, during the presidential election last year, everybody was like looking at their odds. Uh, and now I don't remember the name of the site. I'm trying to look it up. But yeah, you can bet on everything in America now. Polymarket, that was the one. But I think that last time I checked, if you were a U.S. citizen, you don't have access to actually gambling on that site.
Funny looking at all of these. The StubHub IPO closing market cap above 7 billion, 3%, 6 to 7 billion, 53%, $81,000. Oh wow. $74 million has been bet on the New York City mayoral election.
That's going to be something.
Do you get your socialist card in the mail once Mamdini's elected? Like, is it just happen instantly?
I think it comes with like your driver's license and your library card.
Cool. Taylor Swift pregnant in 2025, 15% chance.
2025? I don't know. The things that so does this work if you're an American? Oh, so it says Polymarket will soon be available for US traders. We're working hard to get the US platform ready for launch. So currently, if you're an American, you can't bet money on Polymarket, but the rest of the world can. Interesting how the rest of the world has so much interest in betting on the New York City mayoral election.
Hey, they shall gamble.
It's StubHub IPO closing market cap is crazy.
I haven't really looked at this too much because I'm not like a gambler at all.
Yeah,
Well, it's funny I say that, and then you look at the way that I invest, and you're like,
you do all your gambling in the options market.
yeah, and because that's that's like legitimate, man. That's not really gambling. Will Polymarket go live in the U.S. in 2025? Says 97% chance, $2 million bet.
So saying a 52% chance that JD Vance is the Republican nominee for president in 2028.
You know what's interesting on Polymarket? I bet you if you, I'm sure they have like you can use mask your IP and do it with crypto. I think you could do it as a U.S. resident. I don't know.
You think so?
I
Through
can't
like
be
a
the first person
VPN?
to try to do that. They probably got that blocked too.
I'm sure they figured that out.
Wow, there's a thing on the. Have you watched K-pop Demon Hunters?
No, but I know the show. I think Pinsy watches
Claire was
that.
obsessed with it, but right, there's $122,000 bet on how many people stream the movie.
Will Putin meet with Zelensky? 1% chance.
All right, well, we're dragging this one on, and I don't think we're getting any good quality content out of the tail end of this.
So real quick then. So let's do a rapid fire.
All right, sum it up.
So, how to build a wealth plan for financial freedom in 10 years or less. How would you do it?
Ooh, how to build? Well, I mean, there's a big difference from starting from zero and starting from
Let's say you're starting from zero.
You're starting from zero. If I look back at the biggest mistake that I made along my wealth journey was trying to only compound wealth and not looking at cash flow early enough. And I'm not talking about the myth of passive income. I mean, real estate is semi-passive and it's the best that you're going to possibly get. So if you're looking for true financial freedom, 10 years would be hard starting from zero. You would have to create something or provide a service of such overwhelming value that people with money would pay you a lot of money to have access to. And if you can do that, and you take those earnings and you put them into cash flowing real estate, you could be well on your way. You might not make it all the way there going from zero to financially free in 10 years, but I think that that would be a good path. If you've
Yeah.
got some assets in market, looking at how much cash flow real estate you can buy with those assets and whether or not the cash flow currently on a 10-year note would cover the costs. So, right, you might have to work for the next 10 years, but at the end of the 10 years, if those properties are paid off and the cash flow is exponentially greater than your earnings capabilities, you're there, which is kind of the model that I'm trying to rework on my end. Richard, what about you?
That's right. I agree. I think so. So to get there in 10 years from zero, you would need a liquidity event of some sort. That to me, like that's if you're talking about financial freedom, meaning you don't need to work for money anymore, like you don't need to earn an income, you have enough assets to live off the assets. To do that in 10 years, unless you have a very low cost of living, which is possible too, I think you would need a liquidity event. Um, Really, I feel like you need to have 10 years of earning good income to get the financial freedom. That's the best way. If depending on what your burn rate is and how much you spend, if let's say you figure out you need to earn 200K a year in order to save enough so that in 10 years you can be financially free, it just becomes a function of how quickly can you get to 200K a year in income and then spend 10 years making 200K to get to financial freedom. So that's how I would kind of look at it if you're not trying to get like a liquidity event and sell a company or something like that.
Model that I've
Uh,
seen over the last 25 years, especially for those of us that are like marketing entrepreneurs, agency owners, and things like that, that we have the high earning potential. You take that money, you invest it for capital appreciation, and then you take the profits from that and you put them into cash flow real estate, and you end up growing multiple streams of wealth. You end up growing the asset, you end up growing the asset under the cash flow, and then the cash flow, which is the element of financial freedom. If there was one lesson from that entire conversation when I look back on my journey that I got wrong, was understanding that the asset appreciation does not trump modeling out for maximizing cash flow over the long term, right?
yeah.
I look at how many times I had X millions of dollars in liquid cash that could have gone into real estate, but I was worried more about compounding it from one to two, two to five, five to 10, that any one of those times put into direct real estate would
Hmm.
probably, I mean, not probably, would have given me a cash flow model that would mean that like I would never stress over average living expenses ever again.
Yeah. The flip side of that too, though, is I think a lot of people, especially in the agency, like you mentioned, like marketing entrepreneurs, a lot of times in the agency business, you have a lot of high earning people that are so focused on the cash flow, meaning like earning more and more from their business, making as much money as possible, that they don't focus on the wealth side of the equation at all.
Oh yeah.
And so they just spend everything they make because they're like, I can just keep making more. And especially if you're young, like if you're in your early 20s, like I feel like a lot of people are guilty of that in their early 20s
Oh,
because
I
you,
was so
you think
guilty
you
of
can
that.
just you think you can just keep making money forever. Like you'll always have the same amount of energy and you can always just keep making more. Um, but then once you hit your 30s, you're like, well, it would be nice to not have to grind 20 hours a day for the
Right. I know I made that mistake in my 20s, like living in the big city, making a lot of money, and finding ways to spend it, right? Living the lifestyle that you never thought you'd ever have the opportunity to live. But no one was telling me that, right? The decisions that you're making when you're 20 are going to directly affect what it looks like when you're in your 40s, right? Because
Yep.
you should have tripled your money between that if you're using like the rule of seven. Um, Man, every one of those nights out, right, is probably a month's worth of income now.
Yep. But when you start making a lot of money, I feel like everybody like there's a initiation that you go through when you start making a lot of money that everybody's got to go through, like the first couple of years, just like spending it because you're not used to having a lot of money. And then it gets old. After a while, you're like, once you've made a lot of money long enough, it no longer becomes interesting.
So on the markets because my trade book is.
So the
It
markets
feels
are
like we're
still,
back to where we were right after the announcement.
we are exactly where we were at when we started the show. I mean, the Nasdaq is off like a
The
third of a
Dow did
point.
go up to plus 400 and then down 100 and now back up to 220. Now, the big thing is about that, these are half point moves now because the Dow's at 44,000. So to say it's up 400 and then it's down 200, you're talking about 1 point to half a point. It's not really that big of a move. It just sounds like a
No,
big number.
but the VIX, when we started the show at the top of the show, the VIX was down 2.5%. It's now down 5.5%. So to me, that is a negative indicator for where we're going into the close.
Yeah. Well,
So I think we're going to see it go lower in the next 30 minutes, a lot lower, but we'll
okay. And then
see.
overnight, you think we're going to give up a little bit more again?
Oh yeah, I think we're going to see it drop in the
All
last
right. Well, then
15
I'm
to
going
30
to
minutes.
hang on to what I have and see where we go.
Not that I'm a technical trader, but
Have you ever heard of Patrick Bet David?
yeah, I know.
Okay, it was interesting. Somebody's like, "Hey, you should do this and this and this and this." This guy's Disney, and I'm like, "I don't know who that is." They're like, "How do you know this?" I don't know if I'm buried under a rock, but they're like attacking me on LinkedIn because I didn't know who he was. Sidebar. Who cares? All right. With that, we're gonna end the rambling of this podcast. We'll see you next week. I think next week I want to get back into those topics we've been working on. Those have been doing so well, and I feel like we provide so much
Yep,
more value where we're individually addressing questions that people
let's do it.
have about, like you did at the end here, with how to find financial freedom. Until then, I am your host Roger Bryan, and that's
Richard
okay.
Lorenzen.
We'll see you next week.